guys, liquidity is your stop loss, is your money, your capital in the market is what we call liquidity. So don't confuse yourself. When you hear liquidity, it's your stop loss, your capital, your money in the market is what is called liquidity. So guys, and liquidity sweep is a strategy that is used by big institutions. So all those guys that have big capitals, like all these banks, all these hedge fund traders. So it's a strategy they use to grab our stop loss. We that are retail traders, me and you, we are retail traders. So a liquidity sweep is a strategy they use to grab our stop loss in order to move the market. So that is just a layman definition. That is a layman definition. Let me show you. For instance, when price, most of you guys will enter the market from here. For instance, I'm using it as an example. Most of you guys, you will enter the market from this zone. You enter the market from this zone. Then your target, you put your target here. So you want to target this low, for instance. You want to target this low, for instance. So if you look at it, the market started going in your direction. Look at it. The market started going in your direction. All of a sudden, it went back with this candle. If you look at it very well, so it went back and grab your stop loss. Look at it, this candle. This is where you place, for instance, this is where you place your stop loss. This is your stop loss here. So it went back. This is your stop loss here. So see this candle. It's called a liquidity sweep. So it's a strategy that those guys that have big capitals, they use to grab our stop loss. So that this week is called a liquidity sweep, as the name implies, just to sweep your stop loss. So let me show you another example. Guys. Let me show you another example. Okay, if you look at it, when the market came down, look at it. The market came down heavily. Look at it. This is the footprint of all these hedge fund traders. This is their footprint. So most of you guys, you know, when price come back to this zone, it's still going to sell to the downside. Most of us retail traders, we know. So what some people will do, they will place their orders even before the price approaches that zone. They will place their orders here. Most of us, some people will place their order at this zone like this. They will place their order even before the price arrive. Maybe they want to use this order block, for instance. So they want to use this order block. They have already placed their order even before price approach. And if you look at it, the market came and grabbed liquidity again. Look at it. This is their stop loss. So the market came again and grabbed that liquidity. See, look at it. It came again and grabbed the liquidity with this candle. Let me tell you, whatever you are doing in the market as a retail trader, all those big guys, all those big institutions, they know what we are doing. So it's a strategy they use to grab your stop loss. That is a strategy, guys. So you can see. So all those people that place their order, the market will take them out and still later go in their direction. You can see. So guys, that is what we call a liquidity sweep, guys. That is what we call a liquidity sweep. Let me look for another example. Okay. So guys, if you can, as you can see, market started selling from this zone. So and it pulled back to this order block. So most of us, we mark this zone as our order block. We will mark this zone as our order block. So when price return back to that zone, then we'll take our trade. Most of us will take our trade to the downside from there. So most of us will take our trade to the downside. From there, look at what the market did. So the market started coming down. Look at it. The market started coming down and went back again. Look at it. It went back and grabbed your stop loss. It grabbed the stop loss and started going to the downside. Can you see this? This is where you place your stop loss. This is your stop loss. This is your stop loss zone. So the candle still went and penetrate. Look at it. So the candle still went and penetrate to the, see, and it still penetrate. So I don't know if you guys can see it very well. The candle still went and take out your stop loss before going in your direction, before started going in your direction. So guys, all these things, they are strategies. They are strategies that are used by big institutions to grab our stop loss, we that are retail traders. So guys, this is what we call a liquidity sweep. So liquidity is your capital, your money in the market is what is called liquidity. Your money in the market is what is called liquidity. So and liquidity sweep is a strategy that is used by hedge fund traders, all these banks. So it's a strategy they use to grab our stop loss as a retail trader. So guys, it's very simple. It's very simple. So have a nice day.